your convenience. I'm now recording the meetup. Okay, so we're going to be looking at how we trade these sectors. These are the primary sectors which we trade with options. We don't do complicated spreads. We do not spread trade. We do not buy one and sell one against the other. No spread trade. This is buying calls and buying puts. We were able to do that on ETFs because we don't have the same type of implied volatility that we have with stocks. It just sucks all the premium out of the option. And even if we have a good strategy for a directional move, the option can, between time decay and volatility crush, can end up losing more than you can make. So, but with ETFs, it works extremely, extremely well. So before we start, does anyone not know what an ETF is? Because we'll be focusing on sector ETFs. You can feel free to speak up, unmute, or just type it. Does anyone not know what an ETF is? Okay, and throughout the meetup, I want you to unmute and ask questions. You don't, if you raise your hand, I will not see it. If you do the raise your hand in the Zoom thing, I will not see it. Just unmute, ask a question, pretend you're in a real meeting and there's interaction going back and forth. If you want, you can type in a question, and when I see it, I will get to it. It's in front of me, so either type in a question or just unmute and ask a question, and we'll address it in real time. Okay, so we're looking at these sectors. These are the only ones we trade. Because we want a very diversified account portfolio. Okay, so there's never any there's always something making money some way, somehow. So whatever you're doing, there's always something making money for you, depending on the sector you're in and market direction. There's always something profiting. All right, first and foremost, let's take a look at the big picture of the market. I'm going to switch to the charts, and then we'll come back to the handout and go through one of the strategies there. So I'm going to switch off to the chart now. Okay. What you're looking at right now is the S&P 500. This is a monthly chart. Every candle is 1 month of time. Okay, 1 month. Big picture. Right here, this is 2003. If you take a look in the data box here, it'll tell you the date, open, high, low, and close. Okay, price. So this is 2003 SPY S&P 500. This blue line is the monthly 40-period simple moving average. You're going to find a 40-period simple moving average on just about every chart we use, whether it's daily, weekly, monthly, or intraday. Every chart we use, you will probably see a 40-period simple moving average. We started using that a long time ago when it was introduced to us by Oliver Velez, because that was something he used a lot, and we started playing with it. And next thing you know, we use it on all of our charts as a trend indicator to keep us on certain sides of the market if we're going long or short, but it gives us a good indication of market trend and support and resistance. Okay, so this is a monthly, so every candle is 1 month of time. So this is 2003, and this market stays above the 40, and then comes 2008. This is the big drop that happened in 2008, where the market got crushed. Okay, started in 2007 and then continued right into 2008 with this market decline. And then the bottom of the market was around April, March of 2009, and then we rallied, and we've been in this monster, never-ending rally since 2009, where we got back above the 40-period moving average, the monthly 40, and we've stayed above it. This trend has been in place for more than 10 years now. Every couple of years, every year or 2 or 3, we pull back to the 40. When it pulls back, you're going to hear people in the news on CNBC and all those news organizations, the sky is falling, the market's going to crash. It's like, everyone protect you, you're going to lose everything. No. We're in this massive uptrend. A couple of years go by and we pull back to the 40, massive uptrend. But when the market's coming down, you're going to hear them screaming on the news, okay? That's why it's good to see the big picture and not listen to the chatter on the news. Their job on the news is to, for whatever reason, to scare you, to tell you what's happening that particular day. But you won't hear them talk about you will never hear them talk about this on the news because it's not as scary, it's not as interesting, okay? This is the big picture. This is what keeps you calm. This is what keeps you sane, knowing the big picture. A couple of more years go by, we still in this massive uptrend. Right now, this is 2017, 2018. You see the date on data box. Here we are, 2019. Here we are in 2020, when everything shut down because of COVID. This drop lasted 3 weeks. 3 weeks. So since 2009, the market hasn't been below this 40 for more than 3 weeks at a time. That's it. And since 2009, that's 12, 9, 10, 12 years. In the last 12 years, the market has not been below the monthly 40 for more than 3 weeks. Okay, it went down and rallied right back above. If we had seen 2 consecutive closes below the 40, then there's a good chance it might go lower. But we haven't had that. It pulled back to major support and then right back into the predominant trend. This is 2020 when everything shut down, then immediately right back above, right back, massive, massive rally, one of the fastest rallies ever. Okay, we continue. Once again, we drop. This is 2022. They're screaming about how the markets are going to crash. They're going to fall back to all these low levels. No, the market has to pull. Market goes high, pulls back to major support every couple of years, just the way it is. Okay, but you'll hear on the news when they start screaming, the sky's falling. Don't listen to the sky's falling. They'll tell you, we're in a bear market now. It's dropped 10%. We're in a bear market. Okay, it dropped 10%. We pull back to support. And that's just catchphrases some writer creates for the person who's reading the news. Remember, the people who report the news, all they do is read from a teleprompter stuff that's been written for them. Okay, so don't get all freaked out when someone says we're in a bear market. No, we just pull back to make the support. For the long-term investors, this is the opportunity, because this is the long-term support, long-term support. This is when the long-term investors are setting up positions. Okay, and where are we right now? We pull back to support. We came above it. Pull back. We're sitting still right here, right now, right above in this massive uptrend that's been going on for the last 12, 13 years. Remember, each one of these candles is 1 month of time. And here we are. This uptrend has not been broken. Yes, we have pullbacks. This is scary from day to day, but you don't let yourself be freaked out from a long-term point of view. This is all money to be made. This is a monthly chart, but this is, we trade, this is 30 days worth of time, 30 days, 30 days. This is money we make trading, okay? From day to day. This is opportunity. When we see a nice trend like this rapid down, 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 these are potential trades that we should be in. When we see this going up, these are all trades we should be in with our strategies. When we see this going down, these are all trades we should be in with our strategies. And when I go through some of the stuff over the last year, you're going to see that the big winners over the last, through 2022, was on the short side, because our strategies were picking up all these short trades and many short winners on the short side with put options. Okay, so along the way I said, please stop me, ask any question you want. Okay, so I'm gonna, do we have any questions on this big long-term trend first before I change charts? Any questions at all on this big picture long-term before I go to more current, what's happening right now, and take a look at 1 or 2 markets? Any question? And don't shy with him asking questions. Anything you're not sure about, ask it. And don't think this question might be silly. All right, so I'm going to go ahead and change from this long-term picture, big picture, which is basically for long-term investors out there, this is the time. It's been the time for several months now to get in if you're going long-term invest. What is the projection for 2023? I don't do projections. We do trades. So whatever is this trade signals give us on our daily charts, that's what we do. Right now, we have multiple buy signals. Right now, as of this weekend, we have multiple buy signals in several different markets as of this moment in time. So coming off this massive uptrend on our daily charts, we have several buy signals. And so you have to be looking at the strategies and go through each chart. We have the 28 sectors. You go through them with the different strategies, and you see which ones have the buy signal. So you have to know the strategies and go through each sector. Usually, I email that out to at least the trade alerts to all of my people I'm coaching each evening. Becky is the one who does the scans for the ETFs and ETF sectors each day. She sends it to me, and then I send it out to the people who I am coaching. And so several people on the meeting right now get that each evening. Other people just do the review themselves. It takes just a few minutes to actually go through all the sectors and see where the buy and sell signals are. But yes, we have multiple signals right now on a daily charts, not on the monthly. The monthly is showing us uptrend. That's perfect. So when we have a massive uptrend going on, we're sitting right above long-term support levels, and we get buy signals on the daily charts. That's just everything lining up nicely for a nice rally over the next maybe couple of weeks. All right, so I'm going to switch off now to the daily chart and what we're looking at today. Since energy has been a big thing over the last couple of months or years even, we're going to take a look at the energy sector. XLE is how we trade energy. All right, so I'm going to first go back to the handout. I'll show you what's on the handout, and then we'll come back to this chart and we'll show you the technical buy signals and technical sell signals, okay? So let me change the share back to the handout, show you what's on there, and then we'll come back. Okay, so should be seeing the handout again now. For those of you who came in late, if you go to the chat window, there's a link for the website where all the handouts, can be found and downloaded, along with the spreadsheets you'll be seeing today with all the trades. So the trades are on this website, and also the handouts. So once again, here are the sectors. And here's how we know what to trade. And I asked Becky to put this together for me to share with the group, so you have a feeling for what type of win and loss percentage we see over time. Just hung up on somebody, so they'll probably call back and hang up on them again. Okay, sectors. So 2019, with our option strategies, we only take trades where we expect over 84% wins or higher. So we expect 84% wins or higher. So that gives us a line in the sand. And I'll show you a little bit later in a few minutes how we have stats for each particular ETF. So we're going to look at 2 ETFs today, energy related. In 2019, we had 520 potential trades and 61 losses, basically 90% winning trades in 2019. This has one ATR target. ATR means average true range, and that is how much an ATR, that means how much the underlying ETF or stock moves in a given period of time. So we set our targets based on market volatility, and it's the volatility of that particular ETF sector. So if the ATR is 3 points, that means on average, every 5 days, this ETF moves 5 points. If the ETF is 6 points, it means on average, every 6 days, this ETF moves 6 points. So if I have a 1 ATR target, that's based upon how much that ATR is moving in real life. So we have a realistic value to set our targets to. We don't just fabricate them in our heads and make them up. Realistically, what most people do, they will literally make stuff up in their own heads, whatever it might be that has to do with trading, unilaterally declare it to be true and valid, and then go act on it with real money and then lose money. And then they'll find a way to blame anyone else but themselves. You can't do that. That's just a great way to lose money. Sometimes you make money, sometimes you lose money, but you can't make money consistently. That's why we maintain these stats and the numbers, okay? That's how we will know what to trade, when to trade. Anything you see in a rectangular box, that's put there by Becky. I do not type stuff into boxes. I do not do that. Becky keeps track of all the ETFs, all the wins and losses, goes back history till 1999. So she tracks everything. We know the win-loss for every ETF for multiple target sizes. So we know what to trade, when to trade, and what to not trade. Okay. So, and also difference between trading long and trading short. So in 2019, 94% winning trades on the long side, 84% winning trades on the short side. In most years, there'll be a higher percentage wins on the long side than the short side in most years until we get to 2022, where it was flipped. That's why you got to be trading both sides. If you just rely on the long side, then 2022 might come along and you end up losing money because you're only trading long when the real money was made with puts on the short side. Okay. So 2020, 92% wins on the long side, 87% wins on the short side with 388 potential trades. 2021, 359 trades, 89% overall, 91% winners on the long side, 85% winners on the short side. This is usually what we see, 90-something% long. And not that you won't make money if the market goes lower, it's just that we want to keep making money when we don't want to just sit there when the markets go down and just wait. They might be waiting for months without any trades or making money. We want to keep booking profits. And money on the short side can really add up quickly with volatility because it juices up the option prices. And we have strategies that get you in at the very top of the market. And if you manage positions correctly, it can be super profitable. All right, 2022, 85% wins overall, with only 78% wins on the long side, but the short side, that became the big winner. So when I showed on the big picture view, the big drop that happened in 2022 just kept going down every month. Those we picked up with our short strategies. And that's where we capitalize those from day to day and week to week. So we want to be trading both long and short because you got to have the short strategies in play when markets are going down. Okay, so that is what's working when the market's going down, is to trade short, not just wait for it to go back up. We don't want to sit there and be like one of those people. I hope the market goes up. I hope the market goes up and hope the market goes up. Guess what? In 2022, the market went down. So we don't want to be sitting there for months hoping the market goes up. We want to, market's going down. Great, let's make money. Market's going up. Great, let's make money. Okay, that's what we want as traders, to be able to capitalize on opportunities. That's why we trade a group of strategies that capitalize as the market goes up or down, but we keep it real simple with options and technical strategies only, 100% objective. What we're looking at today is an Ichimoku strategy. These are general equations for the cloud. You don't have to know them, but they can be referenced. They're available online. It's been around for at least 50, 60 something years now, the Ichimoku clouds. It's from Japan, and it became popularized in the United States over the last 20 years. And we have several strategies that really have been some of our oldest strategies we've been using for a long time are Ichimoku strategies. One of them, which we only show to coaching students, is the one that finds market bottoms. One is literally for market bottoms, and we show one only to coaching students. Today, we're showing one of them that's long and short. So now I'm going to switch back to the chart, and then we'll go through one of these Ichimoku strategies to give you an understanding of how it works and how we identify trades, and then come back to the handout. Okay, so I'm going to change the share back to the chart. Remember, ask any questions anytime. Okay, the cloud, the shaded areas is Ichimoku cloud. This is called the Kumo. This red one is the bearish Kumo. The gold colored one is a bullish Kumo, bullish cloud. The line above or below the cloud is the Senku. Okay, this line is Senku span A, the one that goes above the bullish cloud. I want to go back up a little bit. Let's see, hang on. Yeah. So here's a bullish cloud, span A. When span A and the bottom below this bullish cloud is span B. Senku span A, Senku span B. Those are the names of those two lines. You see that on the handout also. Senku span A is this top line on the bullish cloud, and is the bottom line on the bullish cloud. When span A crosses below span B, these are just moving averages, okay? These are moving averages. When this moving average crosses below, when A crosses below B, you have the bearish Kumo, the bearish cloud, okay? And it's colored in red. When this is now span A because it crossed below B. So when A crosses back above B, we have the bullish cloud. When A crosses back below B, we have the bearish cloud again. So every time these two lines cross, it creates either the bullish cloud or the bearish cloud, with A crossing above B for the bullish, A crossing below span B for the bearish, okay? Any question about that? Just creating the cloud, okay? So we're looking at a buy scenario, first and foremost. And this red line is the Chiku. That's the name of the line, is a Chiku. There are some organizations that make up American names for these lines. I don't believe in making up American names. Okay. These were the Japanese names. I'm not changing them. Okay. So some call it a lagging line, some call it this line or that line. I'll leave it the original line, the original names. Okay. So what are we looking for this setup? And is for a price of the this is XLE, this is the energy sector. We're looking for this price to close above the cloud. Okay, so here, price is below the cloud, below the cloud, below the cloud, and closes right here above the cloud. Price closes above the cloud. Okay, does anyone not understand a candle with open, high, low, and close? If anyone does not understand the candlestick, let me know right now, and I'll go over it real quick so you understand it, so you can follow along. You don't have to know fancy candlestick pattern, just open, high, low, and close. Does anyone not understand this? Let me know. Either type it in or just unmute and ask a question. Okay, the assumption is everyone knows a basic candle. Okay, so here we get a close above the Kumo, right above span A. That's what we're looking for. And we go over it in more detail one-on-one when I'm coaching people, but we're looking for the Chiku 26 days prior to be above the cloud. So let's see if this one qualifies. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26. This one would not qualify because 26 days ago, it was not above. So we go back to a previous one where, so we're looking for a valid trade, and then we'll qualify it. Okay. Take a look at this one. We get a close above the cloud. Okay. Now we count back 26 days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26. 26 days before, this red line is above the cloud. That's our confirmation. We get a close above the cloud. 26 days ago, the Chiku was above the cloud. And and this had to close below this level so many days also. Go through that in detail when I go over with one-on-one with people. And when I see this scenario happen, I get a close above. 26 days before, this was above. I now know, because we maintained the stats to show it, that I have that 95% of the time this scenario happens, this market will go up a certain amount within the next 60 days. Usually 1 to 1.5 ATR in movement. Let's take a look at the ATR for one ATR. Take a look at the data box. The ATR on this day is $1.23. Okay. So I have on a handout, I'll go over it in a moment on the handout. 95% of the time, this situation happens, XLE will go higher by $1.23 within the next 2 months. We're going to capitalize on that with options, with call options. Most of these trades realistically take anywhere from 1 to 5 weeks. We don't worry about time decay because we're looking for this to move in our direction fast enough and with great enough magnitude to overcome any time decay that we might encounter. Yes, there'll be time decay. And I'll show you some wins and losses so you get the numbers I actually like in real life. But you never know when the big move is going to be. Take a move like this, it just keeps going up and up and up. You hit your, okay, someone pull out a calculator, please. Someone pull out a calculator. I'm going to ask you to calculate a number for me. So anyone pull out a calculator, or else we'll be here for a while. So anyone pull out a calculator. And I'm going to ask you to calculate some numbers. What is $1.23 plus the next day's open, which is exactly $58? So this should be an easy one. 123 plus 58, please type it in. 123 plus 58, $1.23 plus 58, it should be an easy one. Someone type it in. Or else we'll be here for a while, because I'll ask you a few different calculations. $58 plus $1.23 is what? $59.23. Thank you, Michael. So you know, Michael is one of the guys I train with in jiu-jitsu. I invited him to check this out this week. So probably in the next week or so, we'll be choking each other on the mat. Training jiu-jitsu is fun. It's like a chess game. It's so many different variations, things you can do, and it's fun. All right. So let's see. So how this works, the very next day, the open price is $58. When the ETF is at $58 or less is when we're going to buy either the 58 or 57 option, call option, okay? And that call option is going to be, each of these red lines is expiration Friday each month, the third Friday of the month. So if we need about 2 months worth of time. So if the trade is valid on 1/3, we're looking at a March option, okay? So we're buying the March expiration option. If a target is 59.23, that first day, the high is 59.43. So think about this. Within that same day, your first target is hit. It opens at 58, gets as high as 59.43, and your first target is 59.23. Your first target is hit on day one of the trade. Note, this market doesn't pull back. It just keeps going up. So you have a choice, depending on how many contracts you're trading. This is going to be anywhere from a 15 to 25, 30% return at the first target. Okay, it's going to be a fast move of this 15 to 30% return, depending on pricing, so on and so forth. Quick move. You have a choice to get out of the whole position and just book your 15 to 30% return, money in pocket. However, if you're trading multiple contracts, what you do, you set up an order to sell half your, but maybe let's say half your position at a first target. So at 59.23, it automatically sells one contract. There's no sitting there at the computer doing this. It's not day trading. You establish your position in the morning. You buy your options. Let's say you get 2 contracts. You buy 2 contracts. You put in an order to sell to close 1 contract when ETF reaches 59.23. You put that order in and you walk away. To your surprise, a couple hours later, the target's hit. Wow, that was fast. Then you set up a secondary order for your second contract where you are looking for at least 2 times what you paid. So let's say you paid $3 for the option. Let's say $3, $4 for the option. You put in an order to sell it for $6 or $8, 2 times what you paid for the option. And you put in a stop loss above what you paid for the option. Okay. So now you have profit locked in, guaranteed with your stop loss in, and you have a target that's 2 times what you paid for the option, which will be reached because this market never pulls back to stop you out. It never goes back down to stop, you hit your stop. It just keeps going up and up. Probably within 5-6 days, it's going to double the price of the option on that second contract. Okay. Then you get a nice double on the second. These type trades happen 2 or 3 times a year. You get these really big moves in just about all different markets. You never know when the big move will happen. That's why you always have the same account risk per trade. You don't risk 500 on one trade, 1,000 on another one, 2,000 on another one. It doesn't work like that. If you do that, sorry, you will not make money in the long run, because at some point in time, you're going to take a loss on the one where you risk 2,000, and the profits on the one where you only risk 500 will not be able to offset where you lost on the 2,000. To have predictable income, you have to be risking the same dollar amount on every trade, approximately. So if you're going to risk $1,000 a trade, you risk around $1,000 on every trade. If you're going to risk about $500-600 a trade, then you risk about $500-600 on every trade. That way, wins can offset losses, and you don't take any big, you will never have a big loss because you keep your risk approximately the same. Your risk is what you paid for the option. There's no hard stop on these trades until after the first target is reached, okay? So let's do another one of these. Let's take a look on the chart 10-4-22. 10-4-22, was that valid on 10-4? You can count this one again. I want to recount this to make sure I counted the right number of days. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 20. I was off by a day. This one is valid. This is day 26, and it was above. So this one is valid. This one was a valid trade on 10/4. So I was off by a day when I was just counting. So in this one, the ATR was $2.97. Calculation again, what is $2.97 added to the open the next day? $79.33. So what is $79.33? $79.33, and then add $2.97 to it. So 79.33, and then add $2.97 to it. What's that value? Again, 79.33, and add $2.97 to it. Someone please type it in. Okay, 82.30. Okay. When is that reached? The high the next day is 81.63. The high the next day is 82.69. This is hit within 2 days. First target hit within 2 days. Once again, a quick 15 to 30% return on your money within 2 days. And we just keep booking profits, booking profits, booking profits. Okay, and there are other trades that happen in here too that you don't see here because it's not on this chart. And you don't know the setups, but there are multiple trades going on XLE and many other things too. So this is our Kumo setup. It's a close above the Kumo, the cloud. Previous so many days has to close below this level. The Chiku of 26 days ago has to be above the cloud, and that's it. So I'm going to go back to, it's that simple, okay? That's how all of our strategies are set up. Has a setup, trigger, and trade management. I'll show you an example of a trading plan like that. But we trade a total of 6 strategies actively that find market tops, that find market bottoms. Trades like this Kumo is looking for a move from the bottom up that's in progress and looking to move higher. Usually this is the Kumo trade is the mark of a trade about to go bigger, a market that's heading upward, about to even move even bigger. Okay, that's the Kumo setup. But we trade a total of 6 strategies actively to capture market tops, market bottoms, one especially for market top. We catch the very top of every single market, and we short it using puts. We don't sell puts, we buy puts to capitalize on markets going down. And then we have 2 strategies specifically to catch market bottoms, and the other ones are the in-between, the ups and downs. And we average, I'll show you that in a little bit. We went through it a little bit already. All right, any questions so far on this particular strategy? Anything at all? Here's the time to ask questions. Anything at all whatsoever? Okay. So I'm going to change the share back to the handout. Okay, so take a look at the handout. Here's XLE, and here's how it breaks down. The data here goes back to 1999. Every trade has been valid on XLE since 1999 is on here. You'll see we have Christmas in these notes here. This 91% wins would be even higher if we didn't take trades on Christmas week. Christmas week gives you fake out signals. Probably not a good idea to take trades on Christmas week. So if we took away Christmas week trades, this goes to 93, 94%. Okay. So overall, and even the longs and shorts go higher. But here's how we know what to trade and how big a target. I know overall, because Becky tracks this, and we do this for every single ETF, that list of 28 ETFs, Becky tracks this for every ETF since the ETF was created, or 1999, whichever one is furthest back, okay? On total trades, 70 trades, 91% wins overall, long or short. When you break it down by long and short, then 95% winning trades on the long side with a 1 ATR target. If you want a bigger target, 95% drops to 89%. On the short side, at a 1 ATR target, 85% wins. If you want a bigger target, it drops to 79%. This is how people end up losing money, because they don't understand the numbers and the reality of using options to do this. The bigger you make your target, the longer it takes to get there, because the market will go up and then pull back. It will go up higher, then pull back. It will go up higher and then pull back. We have our target here, but if you want your target here or up here, just because you just made up a number, then it has to go here and pull back, has to go here and pull back, and then it goes all the way here. By this time, your option might have expired worthless, because you arbitrarily just made up a target that was too big without factoring in the amount of time it needs to get to that level, knowing that keeping in mind, has to go up, then down, up, then down, up, then down. It goes in swings. It's not just a straight shot up, and everything takes time. So if you don't factor that in or know your numbers, it's hard to just make money just buying calls and puts, because quite often between time decay and expiration, you end up just taking big losses. That's why we've done really well by maintaining these numbers, so we know what target is too big to use as a target, at least for the given amount of time for our options. Sure, we could buy options further out in time, but then you end up paying a lot more in premium for the option. And when you do that, it hurts your ability to make money, because time decay the longer you have the option in play, time decay becomes more of a factor. And the higher your upfront cost, the lower your ability to actually make money. So our 1 to 2 months is really become our sweet spot for our option trades, where the balance between how much we're paying for the option premium and how big our target is, so we know it's going to be profitable, given the size of the move. So we found our sweet spot. You go out 3 months, pushing it. 4 months, pass on the trade. Even if it's technically good, there may not be an option available within 2 months to trade it, because the option may not have been created yet. So not everything you should just take because it's valid on a chart. And that's stuff we go over in real life when I start working with people, because situations will come up where something might look good, but we need to think about what are some better choices. Is it better places to put our money? Not that it'll be a loss, just that if you have a choice where you type $1,000 and your $1,000 could make you a 25% return, or make you a 15% return, or make you a 2% return, would you rather tie up, given a choice of tying up your money to make 2% by paying a lot up front and going further out, would it be smarter to tie up the money to make 25 or 30% return by tying it up for less time with the exact same probability of success? And the reality is, it's smarter to go with the higher probability of success with a potential higher return. Okay. So different people have different personalities. Some people don't care. They know they're going to make, they're happy with the 2% as long as they make something. That's okay. As long as you do it consciously and you know what to expect, that's fine. So anyway, this is what we, as an example, we know how long, we know our shorts. If you took our short trades with the bigger target, you're not going to make any money. You will, at 79%, you get to a point where you're not making money. Money you make on the long side, you're going to be losing on the short side. Don't get greedy. It sounds really good, 1.5% or 1.5 times ATR, the bigger target, but there are ways to do that without shortchanging yourself. There are different ways to get in a better price than expected that will give you a bigger potential target. We might take a look at that in a little bit also. I have one more ETF on here to give you an example of why we maintain these stats. This is XOP, oil production, the oil production companies. Overall, 79% wins. But we don't care about overall, we care about long and short. That's why we break it down between long and short trades. Long side, 91% winning trades on the long side. 60 to 50 something percent winning trades on the short side. When XOP becomes valid, we know we're going to look for a long trade. But if a short trade became valid, we pass. This is why we need to have these numbers readily available to us to know that, because what happens, people make money on the long side, then lose it all on the short side because they try to trade the same strategy up and down. And markets going up is not, they do not move the same way as markets going down. It's a totally different trade, totally different market movement, okay? So don't think they're the same, they're not. Certain strategies work really well on the long side, certain strategies work really well on the short side. They're not always interchangeable exactly like that. It does not work like that. So, but once you know your numbers like this, we know that if this becomes valid on the short side, we pass, okay? But you have to have these numbers. That's what we provide to you. And we update this every 3 months so everyone knows what to trade or what to not trade so they can make a educated decision. All right. Any questions so far on anything? Okay, let's go through, no question, I'm gonna go through, show you what is on some of the, let's see, some trade handouts, trade listing. Okay, this is on our website also, that same place where I have the handouts, you'll see our trade listing. So this is 2019. So I asked Becky to put these online. We actually have this going back over to 1999 for certain ETFs that have been around that long, or some started in 2005 and 2006. They basically have history dating back 20 plus years for every ETF. So everything you see here, we have it for every ETF, every strategy going back to 1999, if it existed back then, or 2005, 2006, where some of them started. But this is how we track, this is how we do the overall stats. 2019, you see the long to short wins. I'm going to, so right down here. This spreadsheet is on the website, so you can just download it at your convenience. 2020 was an awesome year of trading when markets, with COVID, when everything was going crazy, markets were like the most profitable like ever. They were great. When we got sell signals that first shut down in February and March, we ran out of ability to even make money because our put options, we were on our first target where we would normally get maybe 10, 15, 20 something percent. We were getting 60, 70% at the first target. Some options were literally doubling in value at the first target because we basically bought the very top, sold the very top of the market. We bought our puts at the very top of the market. So when the market started dropping, it was massive gap after massive gap after massive gap as COVID shutdowns caused panic and everything, and our options were just crazy increasing in value on the short side. And that's all. So just this is 2020. We go scroll down. All these are short. These are all short trades. So see all these short trade winners, winners, winners. This is what made us massive money when the market went down in February and March. We were just booking profits like crazy on all the short trades. Okay. You don't see a whole lot of losses here. A couple of long losses, but look at all these wins at the beginning of 2020 when everything shut down. It was just one of those great times as traders to capitalize on it, because for us traders, when the world is going to hell, it should not impact us negatively. Okay. It just, volatility creates opportunity. We want volatility. We want stuff happening. We want stuff driving the market. We don't care if it's driving the markets in a good way or bad way. As long as it's driving the markets, it will create buy and sell signals for us, which give us 84 to 90-something% wins regardless. Okay. So 21. So we want something driving the markets. Overall, 89% wins. Once again, it's just really good, solid trading as long as you're consistent. And this is towards the end of 2022. We just booking lots and lots of wins these last few months, and it adds up really, really, really fast. So some of you I know are kind of new to option trading. You may not fully understand the dollars and cents involved. I'm going to open a spreadsheet that was created by one of my coaching clients. I'm going to see if I can find it here. And what he did, he was so proud of, he actually did a presentation with me for a group, and he was so proud of his results because we took him from losing money to making money consistently. That he actually shared his real life trades. It's unrealistic to get people to show you their live trading accounts and real financial stuff, but he actually, okay. This is with a $100,000 account. And I'll let you know, this person wanted to, initially thought they could make 130% return on their money every year. So from 100 grand account, the initial goal was to make $130,000 a year. That's not realistic. You don't just double your money every year trading. That's not realistic. However, you can make a nice 15 to 30 to 40% return on your money every year, regardless of up or down markets. That's not that big a deal. If you follow a plan like we do it and be consistent, that's not unrealistic. So we got him to a point where he was trading realistically. So on his long trades, he risked about $1,000 per trade, approximately 1,000 with calls. And short trades, he risked approximately $500 to $1,000. That was the range on short trades. So anyway, what he did on this spreadsheet shows what options he bought, how much he paid, and his percent returns on these trades. Okay. So this was his very first trade. He had 106% return, you know. So he basically doubled his money, which was surprising to him, but it was a really good first trade. So how this goes on, this is actual dollars made, and this is the percent return on the trade. The percent returns does not change. How much money you made depends on how big your account is. Okay, you have a 10 grand account compared to 100 grand account, it's just a different amount of money being made or lost. But percent returns stay the same no matter whether you're trading then or now, whether you have a small account or big account, percent return is the same. So this will give you an idea for the different trades he took over 7 months, the size of the percent returns. Okay, if something is meant to be a 3% return, it's a 3% return. What the worst thing you do is say, oh, I want to hold this a little bit longer, see if I get a little bit more. Then that just means your discipline has broken down. You have abandoned the strategy, you have abandoned the plan. You let your emotions take over, and you'll let your logic over there someplace, and now you're back to doing the same things that caused you to have to contact me in the first place. Usually people contact me after they've lost thousands of dollars. I don't mean little stuff, tens of thousands. I've had people contact me after they've admitted to losing up to $300,000. That's when they contact me, because they realize the worst was someone who lost almost 7 figures. Okay, then they contacted me. they realize they don't really know exactly what they're doing. They thought they did, but when the markets go down is when you find out whether you actually know what you're doing or not. When the markets are going up and you just happen to be long, happen to be making money, you take credit for it. But when the markets go down and you lose money, then you realize what you're doing doesn't actually work. Okay, you got to be able to make money when the markets are going down. Also, when you're going up, you're just lucky and the market went up and you were long. Okay, so here we go, back to these percent returns and dollar returns. So these are the percent returns to expect whether you're trading now or then. This was a small loss. You see, this is what I like to see. It means, because some people will, oh, I'm a little bit, let me try to get back to at least break even. I don't want to be down when I'm getting out. I want to be a little, at least break even. I know people in a meetup right now who's had thoughts like that, and they ended up allowing a 3 to 5% loss to become 100% loss because it never got back to break even. Okay, I know for a fact that people in the meeting right now that did that, they allowed a small loss where they should have gotten out to become 100% loss. And you just can't do that. There's a very fine line between making money and losing money in trading, and you can't allow full losses for no good reason. Okay, so whatever the outcome of the trade is meant to be, a 0.2% return, great, take a 0.2% return, book it, and that's positive cash flow. It just keeps adding up, adding up, adding up, adding up, one actual real loss. So when you see in our listing all those trades, all those wins, all those wins, all those wins, this spreadsheet is an example of exactly the type of money that's being booked. This is based on a 1% of accounts. There's only 1% of account risk per trade. I'll go over that in a second when I get all the way down. See the percent returns. You just keep booking profits, keep booking profits. So total wins is 18,000. Realized profit 17,000. If that was a 1% account risk per trade. If it was a 2% account risk per trade, that would be 34,000. If it was 4% account risk, it'd be about 50,000. Assuming 3% account risk per trade, it would be about $50,000 in profits. And yes, it is that easy. And 2% account risk per trade is what we recommend, 3% absolute max. You have to be realistic with how much you allocate to risk, because you can't take big losses and then make it back. If you blow out big chunks of your account because you didn't think about reality, the reality is at some point in time you will have 4 to 6 losses in a row. It guaranteed it will happen at some point in time. So if you're risking, let's say, 10% of your account on one trade, it's 89% wins. I won't have a loss. I'm gonna have 89% wins. I'm not gonna get 6 in a row. Yes, you will eventually. So if you have 10% account risk and you have 4 losses in a row or 5 in a row, you just wiped out half your account. How are you gonna make that back? You can't. You know, it will kill your account. So if we having no more than 2 to 3% account risk per trade, you can never have a big loss. You can never do any real damage to your account, and any losses you can actually make back in the next couple of trades. So, and that's all stuff we go over in much more detail when you are working with you one-on-one and getting trades set up. I'm going to switch back to the handout, unless anyone has any questions on this. And if you need a copy of this, just email me later on. I'll send you a copy of all the handouts also. That's not part of the handout. There's a handout on the website. This is not part of that handout. If you want to copy this, email me later and I can get this to you also, this PDF. It used to be online, but that site got shut down, I think. We were looking for it last time, but we couldn't find it online because we actually did a whole video presentation. But that organization is no longer doing that. It was a third party that was hosting the video of the presentation, not me. So let's switch back to the handout. Okay. All right. So what I do is I work with people one-on-one for these strategies. And before we even do that, so some of you have seen them before, but I want to show you guys what the other strategies win-loss percentage looks like also. Some of you have not seen it. Some of you have. These are the sectors again. This is a quick look at a basic trading plan structure. These are not details, but the structure. I always show you the indicator settings, and there's much more than this in much full detail in case you have to create stuff yourself. Then you have all the settings. The setup, trigger and trade management. The setup is exactly what you're looking for in detail. So this will all be filled in with detail. The trigger is exactly what to confirm the trade. So the setup, trigger, and the trade management. I only write one sentence. That is what I go over with you one-on-one. That's the main front of it that I work with you on to make this work. There's a big difference between reading on how to trade and actually having someone show you, because there's stuff I'll show you that you will not find in any books. It does not exist in books. You need people to actually show you how to make it work. You can't just go buy calls and puts and think you're going to be successful. Pricing is an issue. What's too expensive? How much time do you need in that option? Which strike? If you don't have someone showing you that, it's challenging to actually be profitable in the long term. Okay, the sectors, one of our strategies. Not anything we're going over today, but these are actually two of the strategies, one long and one short. Here's the long side. If it's in light blue, it means it's 84% or higher. So if I was going to trade EFA, this is Australia. This is, so I can try, we trade different countries, Australia, Germany, Hong Kong. If I'm trading this strategy in Australia, if it's, this is basically 1 month of time, not enough. The stacks are too low. I need at least 2 months of time. This is telling me this is what I see here because we have the stacks. So I know how much time I need in the option to give me 87% wins. 80 is too low. 84 is the minimum. Okay. So we go to each ETF. This one, if it became valid on this one, I would not pass or not take the trade on XRT retail because for this strategy, the stacks are too low. Okay. The material sector with 1 month of time, I have 86% wins. With 2 months of time, I have 94% wins. Personally, I'm taking 94% wins in 2 months of time. But you need this data to know that. Okay. T-lines, buy, sell. This is the short side. Same strategy, but on the short side. D-hook. Once again, one of our strategies. The more time you have, the better of chance you have of success. You know which ones to trade, which ones to not trade. Don't assume one strategy works on everything the same way. It does not. Not every market moves the same way. So you need to know your numbers. This is the one for buying market bottoms. We know our numbers. We know when this one becomes valid, jump into it. This is the one we look for market bottoms, always market bottoms. And this is the one we look for market tops. This literally every rally will end with this strategy becoming valid. And when we identify that on the charts, we pounce on it. This finds every single market top ever. Every top of every market ended with this sell signal. So that's how we capitalize on shorts. We get in early at the top before volatility makes the put options really expensive. With this strategy, we get in early, and this back in 2020, this is the one that paid off the biggest because we got in the very top, and when it started dropping, volatility does juice these options up big time from the very top. All right, so that's the grouping of strategies we actually trade for the daily chart strategies, and go back to the handout. So I work with people one-on-one. It costs $17.50 to do the daily chart program. That is all 6 strategies, 28 ETFs. Whether you want to work on Zoom or work with me in person, I meet people in Santa Clara who wants to work in person. I prefer in person if possible. I'll help you, but Zoom's fine also. I'll get all your charts set up for you, whether you're working on Thinkorswim or you want to use NinjaTrader, which I like to use. It's easy to use, but either NinjaTrader or Thinkorswim will work really well for these strategies. And you really have to commit for 3 to 6 months to see everything work. Because you got to go through the ups, downs. There'll be a point where you're going to have 20 trades on at the same time. They're all going against you. You'll be cussing me and when I'm not looking at you. You might even call me or email me and do the same thing. It happens. Trust me, it happens. Because you start freaking out. This guy you trusted, and now everything's going against you all at the same time. I'm going to take all these losses. And I just have to relax. Just relax. The reality is, if you have 20 trades on, literally every single one, long or short, are all going against you at the same time. That's why you have to get through these 3 to 6 months to see this play out. Because the reality is, as time goes on, 85 to 90% of those trades that were all going against you will reach the first profit target before expiration. And that is why you have to get through those first few months to see it, experience it, feel it, and then see how the numbers work out in your favor. Because yes, you will freak out along the way, somewhere along the way, you'll second guess everything, but you have to do what I tell you to do. Trust me, trust the process, and those spreadsheets don't lie. Those are dead on, okay? But you have to be consistent with it, and we try to work within your financial reality. If you have a bigger account, $150,000 to $100,000, that makes it easier. If you have a smaller account, $10,000 to $20,000, then we have to get more fine-tuned and pick certain ETFs for you to trade, because you can't trade everything, because some of them just cost too much. The options cost too much. So we'll put together a plan just for you and the size of your account. Like I said, as they say, the more money you have, the easier things are for you. Same thing with trading. The more money you have, the easier it is to make money. The less money you have, we can work with that, but you have to let me know what you're working with, and then we can fine tune which ETFs to trade, and then have a narrowed down list and focus on that, and that's it. And that'll give you the opportunity to capitalize on these moves from the different sectors. We also have the full program where we have the daily charts sectors also. With the daily charts, the weekly charts. With the weekly chart strategies, some people, because of their schedule, don't have the time to work every day on their trades and analysis and so forth. So they only want to maybe work with it on weekends. So this program also includes the weekly chart strategies. So you got to learn the daily ones, but also includes the weekly and also what we call market internals. Another set of different strategies and approach to trading, which is more sentiment driven. Put call options, put call ratio, sentiment driven. So the weekly chart strategies, look at it on weekends only. Place your trades Monday morning, and from the rest of Monday through Friday, not much to do till the following weekend. Very little to do during the week. Most of your work is done on Sundays, and then you place your trades on Mondays. And sit back. And this past year, the weeklies have been, once again, the short side was on fire for the short strategies. But overall, very, very, very good, well over 85% win still. And for those of you who wanted to do this, if you let me know before this week is over, I will take $100 off this price. Instead of $1,750, it is $1,650. And if you want to do the full deal with me for the full program, the weekly, options daily, and the market internals, I'll take $500 off this price. Just let me know before this week is off. Before this week is over. It's all one-on-one, but I need you to commit to at least 3 to 6 months of trading the strategies. I meet with people on their schedule, so we set up different times in 1 to 2 hour time slots throughout the week. I'm flexible in mornings, afternoons, and evenings. The only time I don't work with anyone is on Saturdays. Saturday is my day to train. I get up and I literally go to the farmer's market, and then I train in jiu-jitsu on midday on Saturdays, and then I relax in the afternoon. I do not do any coaching on Saturdays. That's my day for me to train. Okay, and usually Thursdays I'm booked up from early morning till in the evening. So Thursdays I'm not available, and Saturdays I'm not available. The other days I'm pretty flexible to work with people, because I work with people between the West Coast and East Coast, and also working with people in other countries who are in Korea in the military. So we got pretty flexible on working with different people, different times. So like I said, it's all one-on-one, no big group thing. So everything is customized to you. I'll get your computer set up for you. All the charts will be given to you. You don't have to try to create them yourself. They will not be right. No one's ever successfully created the charts on their own to have them match mine. It's never happened. Even the people who are very computer savvy, we want to take out the variables and make sure all of our charts match so we get the same results. Okay. All right. So time goes by really fast when we do this. And I just went over basically one strategy. So usually when our first meeting for coaching is usually 2 to 3 hours long, and I'll send you a checklist in advance. So you really want to get everything in detail. And I try to review people's trades at least once a month. If they want me to, I'll go over it with them because we want to identify anything you might be doing wrong and correct it. Communicate with me as much as you can via voice, email, in person, whatever you want. Just let me know, ask questions when I'm working with you, because if I don't know what you're doing, I can't help you. If you mess up, totally screw something up, let me know. Don't try to, because sometimes I don't hear from people for a while. It's because they messed up. They didn't want me to know. If you mess up, let me know and you figure out how to get out of it, and so you don't do it again. And also, we want to take a look at your trades, because sometimes you might be getting losses that shouldn't be losses. Something's wrong. Don't assume it's not always you. Sometimes, and in the last couple of years, the brokers have problems and they don't tell you unless you go and ask. You literally have to know something wasn't right. We look at charts and it shows on the chart something should have happened, a trade should have executed, and your trade did not execute. Literally, you have an exit order that says sell my contracts when this price reaches this amount. And you look at your order a couple weeks later and you realize it's about to be a full loss. And it's like, well, really? I thought that one got hit. But then you go back and look and realize it should have hit the target like 3 weeks ago. And I should have been out of that trade with about a 20–30% return. But now I'm literally taking a loss. What's going on? The trade never executed. And it literally happened to me. I called the broker up. They looked at it, make sure I didn't do anything wrong, and they confirmed I was correct. The trade should have executed, but for whatever reason, the order did not execute. I did everything right, but it's up to me to be aware of it. It's not up to them to be aware of a mistake. I have to find them. So once I showed them, they're like, okay, this should have been a winner and it should have been at least this much. So in 1 week, they actually corrected it. They got me back my money and got me the money I should have made on that trade. And they can do that, but you have to be kind of nice to them while also being forceful at the same time. It's a balancing act, because you need them to actually work on your behalf for you. And so, but they fixed the trade. They actually went back, confirmed it should have executed. They don't know why it didn't execute, but it was something on their platform or the exchange or whatever it was. The trade did not execute. And that's happened to several people I'm working with when I go back over history with them, and it's like, what happened here? So I talked with the broker and they told me that make sure that I review my trades every month, because they can't go back more than about 30 days to fix things like that, because there's so much data on trades coming in. They don't keep the records for more than about 30 days for all the details of every single transaction that goes through and every setting we had on our order form. So we had to show it. It wasn't our fault, it was their fault. So they need to know in a timely manner if there's any mistakes. And that's why I like to review with people what you're doing, and if it was an error or a problem, let's identify it and see if the broker needs to take some action on your behalf. It can't hurt to ask the broker to fix it for you, but you might talk to convince them a little bit, but they can do it if they want to. If they believe that it was an actual error on their part or the exchange part, they can fix a trade for you. All right. All right, so I don't have any more for this particular meeting. We have our next one set, I think is February 5th. That is a Saturday in between the NFL Conference Championship and the Super Bowl. That's the one free weekend where we don't have big games on. So February 5th is going to be that free Sunday afternoon. It'll be option related, and between now and then, if I can find the video, we had done at a guest presenter a few months back on trading personality, and I wanted to post that video again. I want to see if I still have that, but it's something you should go through and look at, and then work through along with the person, and you might find it quite interesting. Answer the same questions, and it'll give you some insight into your trading personality and why you do or don't do certain things, or why you act or don't act certain ways when it comes to trading. And you'll find it quite interesting. His name is Ronaldo, and he's been trading for a long time. And I had asked him to host that particular workshop for me, because that's one of his specialties, is the psychology of trading. All right, so if you don't have any questions, and we'll go ahead and see about ending the meetup. If you want to work with me on these strategies, the 6 daily chart strategies, 1750 minus 100, if you let me know by the end of this week. And I really want to get these going right away, because you saw where the markets were at that big support level. We have buy signals coming in right now. So if the faster we start working together, the sooner we can catch the next rally if we're seeing more buy signals. So let's try to make money right away with these trade signals as they're coming up right now, because we've been going down, 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 down. And now we're waiting for that turn up, and we're starting to see those signals turning up off the major support. So, and we can hope to book a few months worth of nice profits as the next rally, because we still got uptrend and we got the buy signals. So let me know real soon, today if possible, or the next day or two. And we'll get you going right away. If you already have experience trading, we can get jammed right into it with the valid trades. If you are new to trading, I'll handhold you as much as possible. I'll help you set up an account, or do whatever you got to do, get your account set up, get the chart set up. So but one-on-one, whatever you need, and we'll get it going. Unless we have any questions, go ahead and end it. And we'll get back in the first weekend of February. Let's see if there's any questions. Nope. All right. Then I'll see you guys in a few weeks.